Hey everyone, it's Kirk here again at Option Alpha. So I wanted to do a couple things in this video. One is go through a live, what I call a pure play option trade with you guys here, but also just kind of show you what I'm doing with one particular bot concept that I'm running. I'll continue to share updates on this one as we go. It's one that I've been running for a little bit now, not insanely long, but I want to share with you what I'm doing and what the whole strategy is around it. So this is a bot that I have. It's called a Pure Play 5100 Trade Ideas. It's just the way that I name it, but it is connected to my live TradeStation account. It's got pretty decent performance right now, but it's been having some ups and downs. So it could and would maybe potentially have some more ups and downs as we go. It's only done 20 positions, so that's the big disclaimer. It's like it hasn't done a lot of positions yet, but this is kind of starting to evolve here, and I just figured I wanted to share it as we kind of go. But you can see the win rate on this thing is about 55%. It's got 11 wins, 9 losses. It did have a 35% drawdown, which was kind of tough to go through. And you can see that the average win is 109 and the average loss is 103. So a little bit of a difference there, which is what I'm trying to capture here with a better than 50-50 win rate. So the reason that I call it a pure play is because what I'm trying to do with this bot concept and just try to show and hopefully describe to people as I do this for hopefully educational purposes for all of you guys is that what I'm trying to get to is trades that have a little bit better than 50-50 shot of being winners. So better than a coin flip. You could consider them like a weighted coin flip to a certain degree. So a weighted coin flip shot of winning, but the reward to risk that you're taking in on the trade is better than 100%. So you're capturing a lot more premium when you win than you are losing when you lose. And so that's why I call it the 5100, because you're taking shots that are better than 50-50, so better than a coin flip, a weighted coin flip, and you're trying to capture trades that have 100% risk to reward or better. So the reason that I'm targeting this 50-55% range is because actually when our guys did the research on this and we published this, I'll link to it in the show notes or the video description right below here so you can read this research, it's totally free. But what they found when we looked at the probability of profit and the predicted probability versus the actual win rate is that when you look at the trades in the 50 to 55% targeted probability of max profit, those trades had a lot more consistency. So the volatility or the variance for trades that were targeting 50 to 55% probability of success, those trades had a lot less variance or volatility. And you can see that just visually here on the chart. This is the blue line here at the 55% probability of max profit level. There's a lot less variance in here, which means that when you're entering a trade that is shown to have a 55% probability of max profit, that's more likely to hit 55, 56, 53, 52, like somewhere in that range, a lot tighter. Now, if you contrast this with trades that are targeting, say, 70 or 75% probability of max profit, and I see a lot of people doing this too, and I used to be one of those people where it's only 70% probability of max profit, right? But at some point, you get to the idea here with this research that those types of trades have a lot more variance in their probability of max profit. Not that means that you can't trade those or you shouldn't trade those. You can trade those if you want to, but you just have to build in a lot more premium to cover that variance in those types of trades. It might just be harder to find those types of trades. So in this example here, you can see if we were targeting a 75% probability of max profit, sometimes the probability of max profit was down at 68 or 66%, right? So that difference, that delta between 66 and 75%, I mean, that's a pretty big swing. That's 7%. So if your trade risk to reward is paying 100%, like you're going to lose money on that trade because you're just not covering it enough, right? Or it's probably not 100%, but it would be less. You're just not covering it enough for that potential trade. Now, you did see that if trades were further out, there was a little bit more predictive power in the probability of max profit. So obviously, it's a little bit difficult to predict where things go in a shorter time period. So 10 days, 15 days and under, a lot more volatility, a lot more variance. You go out a little bit further, you get a lot more consistency. 60 to 65% still had pretty good, numbers. It was less variance than kind of the later group or the further out group. But again, it still wasn't in here as much as these ones here, which is like 55%. So for the bot that I'm running, what again I was doing was just targeting, and what I'm continuing to do is just target trades that are just above 50% probability of max profit, 55, 56, somewhere in that range or better. that's great. So better than a coin flip, and they have better than 100% reward to risk ratio. So here's how I do it. I literally have just gone in and just made trades. Every few days I go in and make a trade, let these trades kind of roll off and keep the balance, keep the positions going. I don't do any balancing in this bot at all. I'm just doing pure play stats, probabilities trading in this case. So what I do inside of Trade Ideas is I go in here. I have presets set for this. This is kind of the way that I do it. I'm looking for credit positions just in ETFs that are 20 to 45 days. So I try to avoid anything shorter in this particular case. I'm looking for a reward risk of 100% or greater. And again, probability of max profit 50% or higher. Now I also filter out expected values that are less than $5. So I definitely want expected values that are more than $5. You can also add alpha in here if you wanted some higher alpha values, like alpha is greater than 5% or whatever the case is, but these generally take care of themselves. So this is what the numbers look like right now. So let me just refresh here. So it's 9:54 in the morning at the time I'm recording this video. And you can see right now, these are the top positions, again, ranked by alpha. Now, if you just take this one position right here, and this is why I think it's so cool to look at this and kind of use this as potentially as a model. But this position right here, you can see where XSP is trading. It's trading at 54 or 546 and change right now. And it's kind of moving around, and you can see the spreads moving. But right now, that mid price is around $57, $60 or so. So that means if you're going to win on this trade, you're going to win $55, $60, right? Somewhere in that range. It's still moving around. Now look at your probability of max profit, 51%. So it's not significantly weighted, right? I'd love it to be closer to 55%, but 51% is still a good trade, right? It's a 50-50 heads up play. That's all it is. So even though it's a 50-50 heads up play, it's a little bit out of the money, which I like, which means that stock still has to move against me for me to lose on this position. But more so than all of that, look at the reward to risk ratio for this. You're at 150% reward to risk, which means if you win, which is about 50% of the time, you're going to win $60. And when you lose, you're going to lose $40 and change it's moving, right? That's the thing that we're looking for, is we're looking for some of this lopsided pricing here so that we get into positions that have, even if they're 50-50 shots, even if they're just pure coin flips, we hope they're a little bit more weighted coin flips, but even if they are just pure coin flips, we're taking in enough premium to more than cover the times that we lose. And I think you can kind of visually see this in this, and this is going to take some time to play out, so it's not going to happen, maybe it happens in 50 trades, 100 trades, it starts to get more stable, but you can see it started really good. Then I had a big drawdown here where it was just trading through all of these scenarios, right? And had a pretty good drawdown, and now it's kind of come back. But the core metrics I'm looking at are basically these metrics right here. So average win, average loss, and profit factor. I want to make sure that I'm capturing enough premium to cover the risk in the trade, even if it's a pure 50-50 bet. So that's what I'm looking for. So these ones are really interesting. Let me just refresh and see what else we got here. So again, that one's kind of top of the list here. For this, there's some other ones that you can do too. What I sometimes will do also is, and these ones are a little bit closer actually. This one's pretty far out, but this one's a little bit closer. This is the out of money percentage where the short strikes are. So sometimes what I'll also do is filter for positions that are 1% or more out of the money. So trying to get even just a little bit further out of the money is pretty interesting. Here's an interesting one to look at. I think it's just a good one to look at for just use case, but here's a trade that pays even amounts. So you win, you make about $50, you lose about $50. It's kind of trading around there right now. But look at your probability of max profit. Your probability of max profit is 60%, which means that it's probably going to be somewhere in that range, right? The 60%. From our research, if it's around 60%, again, these were targeting 65%, but further out trades, you're probably in that maybe 62, 63, 59, 57 range. And so even if you're in that range, you probably still end up making some money on this trade because you're well above 50%, and the trade pays basically $1 if you win and $1 if you lose on average. So this is a really interesting one to look at as well. Now, of course, you could look for, and I would potentially look for the most lopsided trades that you could potentially find that kind of fit your portfolio. So I just keep refreshing here. So let's just look here and see. Again, I've just refreshed and kind of been watching this for a little bit just to see if we can get anything in here. I do like things that are a little bit more narrow, and right now it's actually finding things that are a little bit wider out. So let's go here to spreads. We'll do the max spread at $2 for these positions. And we'll take off SPY. We'll just focus on XSP. It's a little bit more narrow. So this one might be pretty decent here. Down here below, it's got 55 to 45, at least at the time we ran it. Seems like it's actually a little bit better right now. Mid price is around 57, not too bad. But look at that risk reward here. Reward risk is 132%, which is great. So if the probability of max profits around the 55% region here, we're going to be capturing significantly more premium than we would be paying out if we lose on this potential position. So I like this one a lot. So let's try to get in here. It probably won't fill at, it's probably moving from 57 to 56 and up. So we'll try 54, maybe even 53 as the last value here. So even if I type in 53, by the way, if I type in 53, all my numbers and metrics adjust down to that last value. So if I get in at something better than 53, then that'll be great. So we'll do fast, smart pricing, and we'll move this to our live bot for the pure play, and then we'll get this position in here. Now, I like to do these where I only get into one contract at a time, small positions. Personally, I like the idea of just recycling capital really, really fast with these and making the trade count go up and up and up as we go, which that's really helpful for me because I don't necessarily want to have big, fat, stinking, ugly positions where a couple sequence of risk trades could knock me out. So I like to do lots of small positions that can get the trade count up. So I did get filled while we were talking here at 54, so a little bit better than the price we were trying to get at, which was good. So in this case, the credit to open was 54. We are risking $46, so insanely small. The reward to risk on this is well over 100%, which is great. And so you can let this position go all the way to expiration. You can set some exit options if you want to. Sometimes I'll set exit options at 40% or 35%, something like that. But generally speaking, I let a lot of them go to expiration or very close to expiration because I'm trying to capture, like I said, more of a pure play trade where we are just letting this position kind of go out. So again, this is a live trade, XSP. I like XSP in this case because it's small positions, sometimes a little bit harder to get filled than SPX, but you still have all the cash settlement benefits. So I can let this thing go to expiration. I don't have to worry about it and just let the math and the numbers work out. So hopefully this helps out. I hope this video was helpful. If it was, please let me know in the comments. We'll get links to all of these. I'll have a link right in the video here that uses the exact same filters for trade ideas, so you can use them if you want to too. As always, if you need anything, let us know. Until next time, happy trading.